Okay, great. Welcome to this new Q&A webinar, my friends. Sorry for the delay, but I was having problem with the sound on my new computer. I'm just getting a little bit lost from time to time because I'm not used to the Mac. I'm a Windows guy, not a Mac guy. So sometimes I'm finding some trouble trying to locate the right option. Okay, good. So we all know how this goes. You will be able to ask any questions. Okay, you will be able to propose a chart, any asset, forex, index, commodity, anything. Okay, and we'll go over it. You will be able to ask questions about any particular scenario or any particular something you are struggling with. Okay, so um, okay, I'm gonna Davi, the Brito Davi, he's saying the USD versus the Swiss franc. Let me do first the dollar index and the euro dollar, which are highly correlated. Then I will do the Swiss franc. Okay, I'm gonna put it on the list right after it. Okay, after the euro dollar. And if anyone has any other suggestion, it will be great. Okay. Okay, good. So here, as you can see, I have changed the template layout a little bit. So we are seeing on the upper left side the 12-month chart, which is very important, as you will see at the end of this webinar. The 6-month chart, the monthly, and then on the bottom left we've got the weekly, should be here, weekly, the daily, 6-month, monthly, weekly, daily, and 4-hour. Okay, so we've got all the sequences over there. Let me move this a little bit. Okay. So we're gonna start from the top left. Missing the weekly should be here. Okay, no, sorry, missing. Okay, it was correct. The weekly should be there, and here the daily. Well, there's no room for the 4-hour. Okay, good, no problem with that. So here, as we can see on the 12-month chart, what do we see here? We're going to see this a lot. So what do we see here? Super strong rally made of 2-3 ESC candles and then an engulfing pattern. And price is now testing the engulfing pattern on the 12 months. So after such a strong rally in price, what are we expecting? What should we be expecting? So 50% hit the Davi. So after strong rally engulfing pattern as per the rules and the engulfing like lesson explained in the advanced section in the classroom, we're waiting for price to drop all the way down to the origin of the move. Will that take 1 year, 2 years, 3 years? We don't know. We don't care. Okay? It's just what we are expecting. So since we have now this 12-month bearish engulfing pattern, and if you look also at the 6 months, no consolidation away after a super strong rally. Very, very common, as you can see in so many stocks right now and some forex cross pairs. We're having that strong impulse engulfing pattern that is not capable of consolidating away, and then price breaks lower, fakes out, and drops. So here on the 6 months, you can see it's been doing nothing for almost 2 years within that bearish engulfing pattern on the 12 months and the 6 months. And it reached a 3 months area of supply, super strong, was one single candle at the base. So we can draw also the lower wick. Okay, let me read. Damian is saying, if trading a weekly, daily, 4-hour sequence and the weekly is out of alignment, do you move to another pair or do you look to trade nested within the monthly zone? It depends on the sequence. If you're trading the weekly sequence, then you have to move to another pair, unless you are trading consolidation. So Damian is asking also, is a super strong rally also considered overextended? Well, where we consider overextension if we have at least 3 CPs, 1, 2, and 3, okay, on any time frame, or if we have 3 ERC candles, okay, 1, 2, 3 or more. That's overextension, because within those interchange zones we're going to have 3 or more CPs, so that should be considered overextension. Okay, so we've got if you are imagine this is not the 12-month chart and this is not the 6 months and the 3 months chart. This is just the top time frame. It could be the monthly or the weekly. Okay, this is the middle time frame and this is the lower time frame. So we've got, after a strong rally and an engulfing pattern used as confluence, we don't need consolidation away, but it did. That didn't. Okay, but this can be used as confluence. But you have to put all this into context. Okay, because we have a strong rally. So we are expecting this move all the way down there to the area of demand on the 12-month chart. Okay, so confluence, and of these confluences, this is the top time frame, remember, middle time frame, any time frame. It happens to be 12 months, 6 months, and 3 months chart. Okay, you might be wondering, why are we using these super big time frames if I'm using the 4-hour time frame? Well, you will see, because you're going to see strong movements on the 4-hour as well, and then daily and all that, because they are reacting to these engulfing patterns and these confluences. So we've got, on the lower time frame, we've got brand new level of supply, okay, as a confirmation of these and this confluence. Makes sense? So we've got the lower time frame area of supply as a reaction to the middle time frame confluence and as a reaction to the top time frame confluence after a super strong rally. Okay, so we are expecting price to drop and we are getting our new supply zones. Make sense? All good? Damien, Davis, and everyone else? So now that we know that the big picture is telling us, hey, shorts is the best way to go for long term. Okay, then in the middle time frame sequences and all that, then you can have long, short, and all that. So we are going to stick now to which sequence you're going to be using. Will you be using the weekly sequence, the monthly sequence, sorry, or the weekly sequence? So if you're using the monthly sequence, then you get these 3 time frames. Okay, so this is the very big time frame sequence made of the 12 months, 6 months, and 3 months chart. And the lower one is the monthly sequence, which is the most commonly used in the community and the ones that provide great opportunities without having to spend too much time looking at the charts every single day. Okay, so then you can lower it down to the weekly, daily, 4-hour. I'm not going to be adding the 4-hour chart right now because I don't have space here. Otherwise, I would have to add another layout with 4 rows, and that would make every candle, every time frame a little bit too small. Okay, so since we are using the monthly sequence, look at what's going on here. Can you see also the 3 months candle there? What can you tell me about that candle? Remember, every single candle is 3 months worth of time. So this candle over there, today is the 5th, okay, March 2020. That means that this candle is 1 month faster than the previous candle. And it is a bearish pink candle, gravestone doji or dragonfly. I don't remember, I always confuse myself if this is the gravestone doji or the dragonfly or vice versa. So I'm not sure, but a doji, a super strong bearish pink candle. And if you've been following the analysis that I've been doing every single weekend, okay, we said I was talking about this. Okay, there was a great area of demand here, over there, to go long in the weekly sequence. Okay, but when price was dropping like that with that bearish pink candle, I mentioned the community and the video analysis together also with the euro dollar. No short, no long set and forget here. This could be eliminated. Okay, luckily, fortunately or unfortunately, I happen to be right in reading this price action. Okay, hopefully you didn't take that long over there or the short on the euro dollar. On the euro dollar, I specifically mentioned that we were looking to go long, short and near the supply, but it didn't happen. So that would have avoided, you would have avoided that loss, obviously. So here, as you can see in the monthly, 1, 2, 3 bearish pink engulfing patterns, pink candle, and a super strong area of supply now that has been created. And this is where we can start now putting all the pieces of the puzzle together, because we've got here short bias on the 12 months chart, short bias on the 6 month chart, short bias on the 3 month chart. Okay, so what is the anti-time frame for the 3 months time frame? Sequence, sorry, the weekly. So if we move to here, okay, we should be looking for what? For brand new areas of supply, okay, as confirmation, as a reaction to 3 months area of supply. And do we have that one? Anyone? Do we have any area of supply? If this was, because this one was supply, this one was demand, it has been eliminated. So that one over there should be the area of supply. So that's the area of supply. So now what we should do is to draw that area of supply, and now we are starting to put all the pieces of the puzzle together based on the 12-month sequence shorts, 6-month sequence shorts, 3-month sequence shorts, monthly sequence shorts, brand new area of supply created as confirmation of the 3 months chart with bearish pink candle potentially like that, shooting star, and we are having also on the daily brand new areas being created. That one is confirmed. Okay, so this is how you put all the pieces of that puzzle together. So a bigger time frame sequence, like the 3 months chart, can confirm and or negate a lower time frame entry or sequence. In this case, if you start putting all the pieces of the puzzle together, like what do I have against longs or against shorts, or for shorts and for longs? As you can see here, for longs, what do you have here telling me that I can go long? Nothing really. On the monthly chart, nothing. Bearish engulfing patterns, this is short signals, okay? Short, short, shorts, shorts on the 12 months, shorts on the 6 months, shorts on the 3 months, on the weekly, on the monthly, on the daily. So thinking on going long is just suicidal in this scenario. Make sense? Any questions about this? How you can combine all these time frames to end up planning a short trade that could move or could hold for a long time, because this could happen, price could drop all the way down there in the next year. Okay, as you can see here, rallied on the 6 months with 50% candles, spinning tops, and that is looking like this. Okay, so there is a lot of pips, points, ticks all the way down there to hold for longer. Okay, hello, welcome. I don't know your name because it says guess who, so I just can't know who you are. But welcome, my friend. So let's take a look now at the euro dollar, because the euro dollar has the same scenario but upside down. And as you remember, I specifically said in the analysis the other day, before price hit that weekly area of supply, very strong area of supply, was valid area of supply in the weekly sequence. But when price was creating this bullish pink candle over there, I said in the community, no, we just shouldn't be looking to go short at the weekly area of supply, at the nested area of supply on the daily, and I specifically drew on the 4-hour something like that in the community. Okay, let me switch to the 4-hour so you can see it. I don't know if you remember that. If you're following my emails or my updates, you should be able to remember that. When price was around there with that bearish engulfing pattern, I drew something like the trend line, and I said we are looking for this to happen. But that didn't happen. Price dropped and it continued to rally, rally and rally. So no confirmation happened over there. Why were we looking for confirmation? Because of this bullish pink candle, and as you will see now, we've got the same scenario. Gopi, okay, welcome, my friend. See what we have here. 12 months bullish engulfing pattern confluence, 6 months bullish engulfing pattern confluence, 3 months area of demand confluence, bullish pink candle that could end up becoming a hammer. Okay, this is the exact scenario we saw on the dollar index DXY just a few minutes ago. So that area of supply responsible for eliminating that area of demand has been eliminated. So we've got now a brand new area of demand down there on the weekly, super strong area of demand. That is the confirmation of the 3 months area of demand using also the 6 months bullish engulfing pattern confluence and the 12 months engulfing pattern confluence. Okay, so that is probably also creating a brand new area of demand. Probably in 2-3 months we could have something like that. I don't think they're going to rally so strongly, okay, but that's what it could happen probably in the next 2-3 months on the euro dollar with all these confluences. Okay, it's doing exactly the same as the dollar index but upside down. Okay, let me read what you said. Davis is saying I hit 1-to-1 target, at least a break even. My 3-to-1 never reached. What are you referring to, Davis? To going, well, here on the short. You tried the short here. That's what you're talking about. Okay, on the way down. Okay, good. Any question about this? How we are using all these confluences in order to plan high probability long setups, which are counter trend because the monthly is bearish buys and all that. So super strong rally, and as you can see on the weekly, this on the weekly is the strongest rally. Okay, 2 ESC candles. We haven't seen those 2 ESC candles in nothing over here, nothing over there. This is the last time we saw 2 ESC candles, which was approximately last 23rd on April 2018. So this is definitely showing some strength. Okay, it's been ages since we didn't see that, so that's great. On the interchange zone we could have some trading as well. So we've got an area of supply here that is about to be eliminated. Why do we have an area of supply there? Because we had the trail line break and all that, and it's about to be eliminated. Okay, there is another area of supply over there. I mean, price is going to be rallying, but it's not going to do this, obviously. So it's going to start pausing a little bit, and if it creates 3 ESCs, then we're going to have short opportunities again on the way down to the weekly average demand, where we will be able to go long as confirmation of the 3-month sequence. So by using a bigger time frame sequence can provide us some support to do counter trend trading. If we use the bigger time frame sequence like the 3 months and also the confluences on even bigger time frames, we can use these kind of imbalances to trade counter trend in the weekly and monthly sequences with more confidence because it's having support of many bigger time frames and imbalances and confluences. Make sense? Any questions about this? Okay, Frederick. So remember that you can suggest any ticker, asset, okay, forex, stock, so we can have a look at them. Okay, so I'm gonna go with the dollar versus the Swiss franc. Yes, Damien, you don't have those big time frames on MetaTrader, but you can see the 3 months and the 6 months on MetaTrader. That's an indicator that was created by one of the members from Germany, and it's available in the community, and you can have the 3 months and the 6 months time frames if you want. Okay, or you can use TradingView, or you would have to pay for this service. Okay, but well, I am updating every quarter. I am updating the community with these big time frames so you can use them. Okay, and every time I see something important, I will update the charts. I will obviously miss some because there are so many, but most of the time I'm on top of it all the time. Okay. Okay, good. So now let's take a look at the dollar versus the Swiss franc. Okay, so we are having on the 12 months chart this bullish pink candle after a strong sell-off. We are having these bearish engulfing patterns. On the 6 months chart, we have, come on, 1 sec. We have 6 months area of supply in control. Okay, on the 3 months chart, we've got a super strong area of supply here. Come on. Almost in control. Okay? And we are having, as you can see, bearish engulfing patterns, bearish engulfing patterns. So if you take a look and if you pay attention to these 3 time frames, the 12 months time frame is telling us longer term shorts, the 6 months time frame longer term shorts, and the 3 months as well. Okay, so we've got, we actually have a higher high over there, so we should have an area of supply right there because of the trend line break and consolidation way there. So we've got, as you can see, Edu is asking, okay, can we see MRO, please? Yes, I'm gonna put it down over there so I don't forget about it. MRO, Marathon Oil. So I'm gonna look at it right after this one. Okay, Edu? So first of all, we're gonna end up with the dollar versus the Swiss franc. Okay, good. And the USD CAD as well, so as TB proposed. So something like that. So if we pay attention to this, 12 months short bias, 6 months short bias, 3 months area supply, bearish engulfing patterns 1 and 2. Okay, we've got an area of supply here created, as mentioned in the community, 2 bearish engulfing patterns, bearish pink candle, bearish engulfing pattern. Okay, weekly area of demand eliminated against all that. Okay, remember what we are. Okay, brand new area of supply, weekly downtrend. So what do we have to do here? Longs? No way. No way. Even if we had a weekly area of demand, there is nothing that should put the long idea in our minds, because every single bigger time frame, which are the ones that really matter, okay, are pointing down. Only shorts are possible. So shorts at the monthly area of supply, shorts are weekly areas of supply, and shorts are knee areas of supply using higher time frame confluences. Okay, so on the daily here, let me switch to daily because I used the 4 hour before. You can see knee areas of supply being created there or created already, another one being created over there, and on the 4 hour on the way down. So after such strong sell-offs, price is going to start rallying again for sure. Okay, but right now there's no sign of any retracement and correction, but short is the way to go. And if you are patient enough, price is going to retrace because it does. Price always retraces. Sometimes it retraces at the right time when the rules tell us, hey, you can go short because everything is still aligned to go short. And sometimes when it retraces to the weekly and monthly average of supply and all that, it is too late because a bigger time frame area of demand has already gained control or the dynamics of the markets are changing. But right now, everything is pointing down on all the time frames. Sorry. Any questions about this one? Benu? Damien, question about trend line break. I see you are not using clear and obvious valleys. What's the official route to draw a trend line? Well, tell me which is not the clear valley that I did use. I'm using the valleys and the peaks. Sometimes they are tricky and I explain it, but that's what I do. Nothing has changed. 2 valleys, clear, 2 peaks, clear peaks. Sometimes you have to read 6 months chart. Okay, you are saying 6 months, Damien, but what are you meaning with that? 6 months. I haven't drawn any trend line on the 6 months, so sorry, but I just cannot read your mind. So unless you are very, very specific, I just can't help. You located as that one. Why is that supply? That's what you're asking. That has nothing to do with the trend line, my friend. All-time lows, broken, consolidation away. That's a rule. Nothing to do with trend line. It's just supply because there is nothing on the left. Consolidation away happened. Rules are very clear about that. So no trend line needed. Make sense? Damian? So you didn't see me drawing any trend line there because there was no trend line to draw. It's not drawn anymore on the 6 months. I don't think I did drew any trend line. The only one I could have drawn, which I don't think I did, is something like that, which is valley, another valley, clear valleys. Okay, but I'm not using that. But I don't need to draw to have the charts populated with all kind of trend lines, broken, unbroken. And on my charts, I mean, you won't see so many objects. I have objects, rectangles and all that, because I have to upload it in the community and you need to know why it's supply, why it's demand. But if it were for me, I just wouldn't. I mean, I just would have something like this. Okay, everything eliminated like that. And then I would draw the only thing I am interested in right now on the Swiss franc, shorting there. That's it. I don't care about anything else. So what should I do? I'm just waiting patiently for price to retrace there. That's it. If you want to lower the time frame sequence, then the dailies here, there, the 4 hour, but I'm more interested in the bigger time frames. Okay, so let me read. Davis, all the time price hit supply, 3 months, 6 months, hit the bullish ascending trend line, which prevent ESD from going short. What to do? I don't understand. All time price hit supply on the 3 months, 6 months, but ascending trend line, which prevent us from going short. Which ascending trend line are you referring to, Davis? There are 6 time frames here. So unless you are very specific about the time frame and the trend line and all that, I just can't help. You mean that this trend line over there, that one? Well, no problem. Price hits that area, okay, which is right there, okay, drops, and then price rallies. So you just cannot. You shouldn't be able. You shouldn't be thinking of going long right there, okay? Not only because of that, because there was an area of demand here on the left and all that, not only because of the trend line, okay? But if you start drawing all kind of confluences and trend lines everywhere, then you're gonna find always a reason not to go short or long. In this case, it's very clear that short is the way to go. So if there is an obstacle, like trend line here on the monthly and the weekly, then that will help price retrace to the level that we should be looking to trade. Make sense? So that prevents us from going short, but it is what we need in order to go short, because price at some time needs to retrace to our levels, and any obstacle and opposing confluence are going to help price to retrace to the move that we are interested in right there. So imagine there was a trend line over there or whatever, and then price will start rallying because of that probably, okay? So short bias on this one no matter what, okay? So this is on the dollars versus the Swiss franc. Any more questions about this one? Okay, nothing, Frederick? Okay, Davi, okay, good. So let's go to MRO, Marathon Oil, okay? Which is, I don't know who mentioned it, okay? But let's go. So let me do the top-down analysis. So we've got right now down there 12 months area of demand in control, almost fully penetrated, rallied, and look, it rallied from $9 to $24 for almost 3 years, and then robbing again strongly. There's an area supply right at the top. No, I thought it was a higher high. No, then no. No higher high, so no supply on the 12 month chart. Okay? So on the 6 months chart, we've got an area of supply right there at the top because there was there was trend line over there, broken, an area of supply right at the origin of the move. This area of demand, super strong area of demand where we would have been interested in going long. Look at that. Another example. 1, 2, 3, 4, 5 candles. Super strong rally. Okay? Now we get a super a high wave candle, okay, with very wide upper and lower wicks and an engulfing pattern. This is what's going to happen. I mean, if you look at the stock market, and I'm going to be asking Frederick, he's here, he's also trading stocks, many stocks. So we're going to look at them, some of them over there, like MasterCard, Facebook, Google, Amazon, Microsoft, I don't know, Visa, Starbucks, Boeing, Disney, so many doing that. So the market's going to crash. When? I don't know, but it's going to crash. The S&P 500 monthly area of demand, let me take a look at SPY, okay, could be eliminated anytime soon with this attack. But right now it's still holding. But if price continues to drop, and if we take a look at stocks like MasterCard, okay, after such a strong rally, this is going to drop, my friend. It is going to drop. And that, by being aware of these super strong rallies, this is when counter-trend trading makes sense. Okay? Does it make sense what I'm trying to say here? Frederick, Davis, Damien, Gopi, and everyone? So you put everything into context, and this is when you can start thinking, okay, if I start getting, like, let's continue with MRO, if I start getting, like, look at that, super strong rally, bearish engulfing pattern, retest of the bearish engulfing pattern on 12 months, another bearish engulfing pattern, another one on the 6 months, another one on the 3 months as well, supply created. So this is when you say you should tell yourself, hey, now I can start thinking of going short, because after super strong rally, engulfing patterns on the middle and lower time frames, new bigger time frame area of supply, this is when we want to go counter trend and forget about the monthly sequence and the weekly sequence, because you're going to have losses, loss after loss, unless you use the sequence to go short, obviously. Okay, so Damien, let me read you. Pound dollar as an example. I did an analysis on daily, but I'm a little confused as to whether demand has been taken out. Can you do a simple basic slow analysis? Well, first I have to go over all this, Damien, okay? Because if we are talking about MRO, I just can't jump now to the pound dollar. It's just too much, okay? Let me follow my all this process, okay? I'm gonna put it over there so I don't forget, okay? Sorry for that. Just understand what I'm trying to say, what I'm trying to do, okay? Okay, so Davi, small moves that does not confirm on current counter trend. Gopi, is the current 12 months bar not complete? Surely we cannot rely on the pin bar. You mean this one over there? And that is the reaction, that was probably the trade that happened over there in the smaller time frames, but then price rallies, engulfs, fakes out, another engulf, trying to reach that 6 months area of supply over there. Okay, trying to reach that area of supply, fell short of filtration to that one, engulf, and then on the way down we are creating new areas of supply on the monthly, like that one. Trend line break, okay? I'm just doing it a little bit faster. Another area of supply there. This is demand, this is demand, and this is supply. And another one here being created, and this is the one that is probably going to be eliminated. This is the origin of the pink candle on the 6 months and 12 months and all that. So we are interested in going short at areas of supply like this one. Okay? Make sense? Tested area of demand, tested area here on the 6 months as well at the bottom, which I didn't draw. Expecting bigger penetration, new bearish engulfing patterns being created on the 6 months, 3 months, monthly, a strong area of supply on the weekly, etc. Going short is the way to go, even though this area of demand has been tested. Not only that, but this is an oil and gas production company, oil related. the light crude oil, the Brent are dropping strongly, have been dropping strongly. So these companies are going to be affected very, very bad, very hard by the bearish move on the light crude oil, because the cost of production is going to be the same, but the end product, which is the oil, is going to be much cheaper. So they're going to have the same employees, the same rigs abroad in the Northern Sea and Saudi Arabia and Venezuela and everywhere. Okay, so the cost will be the same, but the benefit from the product, which is the Brent oil or the crude oil, it's going to be much lower. So highly correlated with the crude oil, and we are having near bearish engulfing patterns. So short is the way to go on this one. Good. So let's take a look. Okay, because since we are talking about oil, okay, somebody suggested, I think it's Copy, aren't you? Because it says guess who to presenter. So Copy. So let's take a look at BP. Okay, because I'm not jumping to the pound dollar right now, Damien, because BP is correlated with what it makes sense to look at BP right now because we were talking about Marathon Oil Corporation. Okay, so it's oil related. So this is BP, and then Venu suggested another one, which is Bata India. So I'm gonna put it over here, Bata India. Okay, from NSE, and I'm gonna do it right afterward. Okay, so BP. Good. So BP. Now let's take a look at this. We had super strong area of demand. Okay, all-time highs broken, 1, 2, 3, several candles, and then prices were up all the way down there, and then it was eliminated. But before it was eliminated, price rallied from $37 to 62. That was a nice trade over there. Okay, it was fully penetrated and then eliminated. So now we've got a downtrend on the 12 months. And by just looking at the bearish engulfing lights or bearish engulfing patterns, I call them engulfing lights. The lesson is called like that for a single reason. It's called like that because these engulfing patterns can be used as traffic lights. They are telling you, hey, price is dropping farther down. It engulfs the previous candle, even the close, and sometimes even the low, the open, sorry. It has to engulf the open and the close, obviously, but sometimes even the low and the whole candle range, which is even better. Okay, so we are having 1, 2, 3, 4, 5. So long-term bias on BP, shorts. Makes sense? By just looking at the engulfing patterns. The engulfing patterns are telling us, hey, shorts is the way to go. Then let's take a look at the 6 month chart. Okay, this is 6 month chart. We had an area of demand over there. Okay, it was eliminated, so there was an area of supply right there. Okay, then another engulfing pattern, another one, then price tried to retrace from there. It couldn't. Well, it did for 6 months. Okay, there were trades over there based on this confluence, and price rallied and reached that 6 month area of supply. Make sense? Make sense? Supply is over there because of the reasons that I am explaining. Okay, so we've got a 6 month area of supply with a single candle at the base, and we've got, as a reaction to it, we've got a 6 months bearish engulfing pattern, and now 2 ERCs. This is not demand, that is supply because of the trend line break. Okay, so what do we have? This little guy over here, this is demand. Okay, why? Because there was nothing on the left. This is all-time highs, consolidation away, strong rally, and it took several years, okay, for price to retrace, and then price rallied over there, went up to the engulfing pattern confluence, and engulfing patterns all the way down. So 6 month chart is telling us short bias. We can use this super big time frame imbalances and engulfing patterns and confluences to position ourselves for very long-term shorts without worrying about the stop loss and all that. I mean, obviously stop loss has to be, because if you are trading the stock itself or if you're trading CFD. But if you're trading long-term options and all that, you don't care about stop loss. You buy a long put and forget about it. Okay. So great. Where could be a valid demand on which time frame, Gopi? Because remember, whenever you ask a question, there are 6 time frames here. Unless you specify the time frame, I won't be able to tell, because weekly, valid demand on the weekly. Asking on the weekly here, we've got here the wow trend line break, so the supply should be very bad area of supply right there. Why? Come on, why that area over there? Because we had a peak, okay, trend line break at the origin of the move. That's the wow. So we've got that area of demand that was kissed and then price rallying. But then we also had here, if we look here, okay, this is a very strong drop, okay? So, but is this demand? Can we consider this demand? So, do we have to do this? This is what we can do. I don't really need to do this because I know where is demand here on the left, but you can do this. Yeah, I know that this is what happened here. A low, trend line break, this is demand. Okay, eliminated. So that area, that bearish impulse over there is supply. Okay, quite strong supply, responsible for eliminating that area of demand. Okay, this is way stronger than this mess over here. Okay, so we could say that aggressive shorts are possible. Make sense? Here, on the way down, here, that was another area of demand, trend line break over there, another area of demand. It was eliminated right there, wasn't it? Are you following me? There. So we go up, and left, and we pause, we stop when we see a pause, CP or a peak. This is a pause. Is this? Is it a pause? Yes, it is a pause. So dropped, gap down, consolidation away, okay? That's the area of supply. Why is that supply? I just explained it. Okay, because this was demand. And as you could see before, everything is pointing down. So that's our area of supply. Make sense? Davis, Copy, everyone? Frederick? That's how you do the chain analysis, by looking to the left, and then here it tried to reach, it couldn't, then it reached there, but then since we had the bearish engulfing patterns on the 3 months, 6 months and all that, we are just creating new areas of supply, like here at the top, area of supply, another one over there, no retracement, another one, no retracement. I did retrace over there. So based on the weekly, we've got here a trade and here another one, which are a little bit low. Okay, in the bigger time frame range, it is more aggressive right now because of that, but it is a valid setup aggressively. Okay, so what is the area of demand? The bigger time frame down there. That's where we want to go start to think of going long. It is against the trend on the 12 months chart, okay? But I'm pretty sure the price is going to react to that price quite strongly. So we'll have to wait for new areas of demand on the weekly, monthly, engulfing patterns on the 3 months, monthly. We're going to start seeing those over there, most likely. So 12 months down, 6 months down, 3 months down, monthly down, weekly down, everything's down. Okay? Makes sense? Okay, Damien, I just answered your question. Great, glad to help. This is BP. This is highly correlated. This is integrated oil. The other one was oil and rig, I think, was oil and gas production. But it's the same thing. If we look at Exxon, it will be the same thing. Okay. What about the 12 months interchange above the extreme demand? Talking about this one. Copy? I'm not sure. if that's the one you are referring to. One below, that one over there. I mean, we shouldn't be paying attention to interchange zones when price is dropping. I mean, as price rallies, then you can take a look at the interchange zone, but when price is in a downtrend, this time frame is in a downtrend, I mean, those interchange zones are useless, okay? Okay, that 6 months area of demand is already used up. Tested. Did bigger penetration happen? I'm curious about it. I don't know. Let me see. The low of this candlestick is 26.75. The low of this one, 27.01. So there was no lower low. Okay, so waiting for a bigger retracement in order to go short to the weekly area supply, or even better, down there at the top, at the weekly monthly area supply. So that's aggressively what we are allowed to do on BP. Okay. Davis is saying poor action going up on the 1 month. Yep. So now let's take a look to Bata India, which was mentioned by Benu, I think. Well, I think I replied to this analysis, didn't I? Remember this one today. You posted it today, Benu? Yeah. So, I mean, anyone can tell me, apart from Benu, what do you think I'm going to say about this stock, this particular stock? This is pretty obvious. So, Damien saying overextension. Base, I guess he's referring to the 12-month chart and the 6-month chart and the 3-month chart. Okay. We should be waiting for a bigger retracement. As simple as that. As simple as that. Benu. So, but if you are doing the monthly sequence, okay, this is the monthly average demand. Price will probably retrace to that one, but look at that. 1 engulfing, 2 engulfing already. Okay, so it will probably rally from there for some time, but I can tell you, I could even place a bet here that price is going to retrace down there, yes or yes, no matter what. I mean, will it retrace on the first retest or the second retest? Will it take 2 retests or 3 to break that area? I don't know, but it's going to break it for sure, and it's going to retrace down there, and it's going to retrace, and it's going to react from there. I mean, there's a very, very, very high probability that what I'm saying right now is going to happen. It's going to materialize. We already have a weekly area of supply. Okay, we already have the 3 months bearish of pattern in the making. This candlestick on the right side here is 1 month faster than the previous one. Okay, because this is a 3 months chart, 3 months candle. Today is the 5th March 2020. So this is definitely faster. So going long there will probably play out a little bit. Okay, if you are doing some swing trading and all that for a couple of weeks or 2, okay, and that's it. Probably we're going to have an area of supply right there at the top. Let me see. Let me draw this. Let me zoom out. Zoom in, sorry. So this is a valley, another valley. So what do we have there? At the end of March 2020, this is what we're going to have. Most likely, make sense? Supply. So as per the realignment rules, then that area of demand requires confirmation, because this candle is going to be the one responsible for breaking the bullish trend line. Make sense? So even though, I mean, we would love to trade that one over there, but if you are not paying attention to the bigger picture, the same thing applies to the lower time frame sequences like the daily or the weekly sequences. If you don't pay attention to the monthly or even bigger time frames, you will not know what's going on. But now, if you pay attention and you take a look at the 12-month chart and the 6-month chart, I mean, then that area of demand that would look great for set and forget on the monthly sequence could be like, hey, now I don't think I'm going to go long there. I mean, you could go long there if there's a daily wow long as confirmation over there and all that, okay? Like a setup that could last for maybe a couple of weeks or 3 or even 4, or price would drop there, daily while long, weekly area demand, and then price would rally to the weekly area supply, the monthly area supply, sorry. And then from there, could start dropping again. So that's the kind of trade that we would be hoping, but in confirmation. So by having this picture, super strong rally, this is what we are expecting. And I'm sure you have seen dozens, if not hundreds of scenarios like this on the stock market. In the last year, 2019, there were so many, okay, so many areas of demand playing out after super strong rally. Don't remember right now. One of them, I remember that we took one of them, well, one of many, but Herbalife, okay. Okay, I just remember this one, okay? So I'm gonna do this, okay? So any more questions about this one, Bata India, Benu? So Benu is saying, I observed that many stocks used to react strongly from monthly demand and weekly demand ERC. Can we go aggressively long for short time? Like I said, the way to go short is to wait for new areas of demand. You want to set and forget, up to you, my friend. But I would not risk a single dollar of my money right there. Set and forget. I would there for sure. And I would, if price continues to drop, do counter trend at the potential area of supply in the monthly. But I would never risk my money there. That's for sure. Okay, up to you. You can do with your money whatever you want, obviously. You are asking me and I am answering your question. You ask me, I said, no way. Then others, it will be great. I will tell you, yes, great. But right now, after that strong impulse, so let's take a look at Herbalife, okay? At Herbalife, we were looking to trade, we were looking at the 3 months chart, okay? We were not looking at 6 months and the 12 months and all that. So what about this one? Super strong rally, and we are waiting for what? For the retracement to the origin of the move. We get the engulfing pattern, we are losing steam. As per the rules, this is what we are expecting. Make sense? So good, so far so good. So that was posted. You can check in the community after the webinar. We posted this setup live before it happened. The 3 months area demand, the nested area set and forget, and then the weekly wow long. I remember that. So, so we had price dropping down there. Okay, we take a look at the monthly, an area of demand, and we take a look at the weekly over there, a weekly area of demand. Okay, that was a textbook set and forget trade. Make sense? Based on this 3 month sequence. This was posted in the community way before it happened, way before. Okay, so we've got 3 month sequence, 3 months trend area of demand in control. You can do two things here. Okay, what can you do? How can you trade this area? You can trade it two ways. You can go long at the monthly area of demand, set and forget, and nested area of demand on the weekly. All these two levels are nested right there in a 3 month uptrend. You can do that, or you can opt for two things, for another thing, wait for a new area of demand. And I remember very well, it was one of the members, he's no longer in the community, I believe, that he took the trade there. I still have good memory. I'm getting older, but I believe the price was there, and after 2 years, there was a 20 MA and this engulfing pattern over there. He was thinking, no, I'm gonna let it run. And I said, well, if you're gonna let it run, probably you're gonna give all your profit back to the market. Because after such a strong rally with this engulfing pattern and all that, price is probably going all the way down to the brand new area of demand that was created down there, because that was a trend line break, and that was the second entry. So you could have opted to trade the weekly area demand or half of it. Okay, you could have opted also to take that area of demand, or take this one, exit there, take this one, exit after 3, 4 to 1, whatever your target is. Make sense? Okay, so even now we've got area of demand tested, and we've got another one over there created after eliminating two opposing areas of supply. So that area of demand is under attack. Look at the attack that we have here with the bearish engulfing pattern on 3 months. But what can you tell me? Obviously, this is an engulfing pattern. What can you tell me about this price action? Anyone over there? Apart from the obvious fact that that is a bearish engulfing pattern in the making. Anyone? What other particular feature of that price action? What can you tell me about it? The traffic light, yes, that's an engulfing pattern, but what else can you tell me? This is a 6 month chart, okay? What else can you tell me about that? Because I'm saying strong, no consolidation away, yes, but there is something else that we discussed in the last webinar. Frederick, I'm sure, exactly. Davis is saying it. Let's see exactly. So let's see if someone else, Frederick, he's thinking. Octavio, he said it. Hello, welcome, Octavio. Speed, velocity. So let's analyze this more closely, okay? By the way, this 3 month area of demand, okay, with a weekly area of demand there and a monthly area of demand, so don't forget, was also nested within that 6 months area of demand, okay? So that muy buenas, Octavio, saludos. We are talking in Spanish, okay? He can speak Spanish. Okay, good. So we also had the 6 month sequence saying, hey, go long, and same here in the 12 months. So it's good, was good. There were even more reasons to go long. So, okay, we were talking about this. Let me go back to our discussion. This area is under attack. Why? Because of the velocity in the arrival. Okay? Why? Because this candle, this is a 6 month chart, okay? 6M over there. So this candle over there took 6 months to be created. 6 months, okay? How long did that candle on the right side take to be created like that, to be printed like that? How much time? 2. So 6 months versus 2 months. Which one wins? Well, it doesn't, the 6 months doesn't win. I mean, because we are talking here about the faster the candle is created, the worst. Okay? So 2 months versus 6 months, 2 months wins. So this candle only took 2 months and 5 days to be formed, because today is the 5th March 2020. So this candle is 4 months faster, attacking a tested area of demand. 2 bearish engulfing patterns. Price is going to drop much further. We've got a 6 month area of demand that has been tested already and it's used up. And we've got another 6 month area of demand here that is used up. So let me draw them. Okay? That. Those are the areas. And this is the pause. Okay? So now that you see the big picture in the 6 months, what can you tell me about this? Bearish engulfing patterns, faster velocity, tested area, used up area, tested area. So potentially we could even see a crash on this one. Could drop all the way down there, even lower. Okay, because of the price action. Tested area of demand, used up area of demand, fully penetrated, tested area of demand, 2 bearish engulfing pattern, velocity in the arrival is super fast. So this is another scenario where we can go short aggressively. Makes sense? This is telling us, hey, shorts aggressively, even if the area of demand on 3 months is in control. Why? Because it is tested, okay, the tested area of demand as well on the monthly, and we have two very big time frame impulses, bearish engulfing patterns, faster than the previous impulses. Make sense? Okay, Damian, Frederick, perfect. Any questions about this scenario? I mean, I just thought about it because, I don't know, we were talking about Bati India and some examples from last year, and like this, there are so many, okay? So many. So now let's take a look at, somebody asked about the dollar, no, that was on the list, but let's take a look at Valero. I think Frederick took a loss on this one, as far as I remember. So let's discuss this one with all this in mind. Okay? So what can you tell me about this? Look at that, 12-month chart. This candle here on the right side, okay, the bearish engulfing pattern being created. This is even faster. Why? Because this candle took 12 months, my friends. And this one, which is way stronger than the previous one, took only 2 months and 5 days. So that is very, very obvious. So it was somebody else then. I don't remember. Somebody. Sorry, Frederick. So also, no consolidation away. So we've got lots of things, just this single time frame, the 12-month chart, which could be, nobody looks at it, okay? Nobody looks at it. You will see analysis everywhere on YouTube and all these guys talking about trading and Bloomberg and the financial magazines and all that. Nobody is mentioning 6 months or the 12-month charts, not at all, okay? But here, when you take a look at this super big time frame, it's very clear that this is going to drop. Okay, this is going to drop. So look at the 6 months. So we have the 6-month time frame on Valero. We had that time frame, that area of demand playing out nicely. But look right now, attack and another attack. Trend line already valid, but it hasn't been eliminated by a couple of ticks probably. So we're going to have a downtrend on the 6 months. So now shorts is the way to go. That was a great area of demand over there, as far as I remember, on the 3 months over there as well, and the monthly. All this here, let me do this. This was the 3 months nested within the 6 months area of demand. There was a valid area of demand, even though the 3 months was out of alignment. As per the realignment rule, we had a 3 months area of demand. So if I, okay, delete this one and sync this one to all charts, we are going to see where we had the trade. That area of demand over there, that was the trade, okay? That happened over there. And there was another trade over there, the weekly wow long over there as confirmation. So this is very similar to the one that I explained before on Herbalife, HLF. You could take the set and forget level down there on the monthly or weekly, or wait for the weekly wow long. Make sense? Yeah, that is buy, according to them, buy. But now price is dropping, and we are having, as you can see here, a super strong area of supply here, responsible for eliminating the tested, used up area of demand over here that I just eliminated. Super strong area of supply, new one being created on the 3 months chart, new one created already on the monthly chart. So we've got monthly downtrend, weekly downtrend, 3 months downtrend, 6 months about to become a downtrend, and 6 months bearish engulfing pattern, 12 months bearish engulfing pattern, 3 months bearish engulfing pattern. So longs, no way. So you put everything together, and then you could have like a balance here. So on the left side, things that support longs, on the right side support shorts, and the long, I mean, this is not weighting now. It's weighting nothing at all. I mean, the balance would be something like this, with a short bias, and the longs here. Okay, it's definitely inclined, pointing south, all the way on the short side. Damien is saying, so certain focal levels are typically nested up to 3 time frames? No, they are not. Certain focal levels depends on the sequence, obviously, but if the monthly, weekly, and daily are in an uptrend and not overextended, and there is a daily area of demand nested within the weekly, that is a daily area of demand nested within 1 time frame, the weekly, not within 3. No, so there's no need. But if the more bigger time frames the level is nested within, the better. Make sense? Like this one over here. 6 month area of demand, 3 months area of demand, monthly area of demand, everything in an uptrend. Perfect. More points. Okay? But if you get a CP in the middle of nowhere, there on the daily, it's not going to hold. Okay? With that retracement on the 3 months, it's not going to hold. Okay. So somebody said before the pound, okay, pound dollar, I had it already there. I didn't realize. So let's take a look at the pound dollar. Pound dollar. Now, just take a look at the charts, at the imbalances that I have drawn, okay? And tell me what is the bias. Long term. Okay, Damien says buy. Okay, let me read what a year said. I think it's a year. For me, the takeaway lesson tonight is that 12 months, 6 months, 3 months need to be included in analysis. I never used to watch them before. Well, you can add them, but you don't need to add them, okay? But if you add them, you're gonna, probably what I was thinking is that in the weekly shopping list, every week, I'm going to be adding like the long-term bias on the 12 months, 6 months. So you pay attention to, because right now, let me do this, 1 sec. I'm gonna pull up, find a window here, and I'm gonna pull up the shopping list so you can see it. So probably I'm gonna add some column here that is the bigger time frame bias. So on the pound dollar, for example, here on the pound dollar, we would say like another column, long time bias, longs. Why? Because we have 12 months area of demand in control, 6 months area of demand in control, 3 months area of demand in control, monthly area of demand in control, new monthly area of demand. So what? Longs. Makes sense. Longs. That will be shorts on the way down, of course, but if you patiently wait for these kind of imbalances, look at this one. So if you take a daily while long over there, being aware that this is a monthly area of demand as confirmation of the 12 months area of demand, as confirmation of the 3 months nested area of demand, as confirmation of the 3 months area of demand nested within all that. And now we've got a 3 months bullish engulfing pattern sequence, confluence. So you put all this together. My question is, are you going to exit a 3-1? Could this be one of the scenarios where you can hold for way longer? Look at this. That's quite, if you take a daily while long, at the end it would be like there. Okay, that's like probably 10-12%. That's an average, a rough number. Okay, I'm not sure, I would have to measure it, but it looks like that's like 10 times or more. Make sense? So pound dollar, long-term long bias. But if you look at the weekly sequence, then the weekly is out of alignment, attacking that area of demand, eliminating, fake out. Sorry. No consolidation when this bearish impulse, no bearish engulfing pattern influence, so no shorts. Expecting price to continue rallying and eliminate that poor area of demand on the daily, because it has one pause, one basing candle, and then 2 ERCs. Daily area of demand being created. So this is great areas of demand being created. So long-term, long bias on pound dollar based on these time frames. And we've got also a 6 months bullish engulfing pattern. We've got 6 months, 3 months bullish engulfing pattern, 3 months demanding control, 6 months demanding control, 12 months demanding control, monthly demanding control, new monthly every month. I mean, what else do we need to see in order to go long on pound dollar if price reaches that area of demand? This is a very, very strong setup based on all these confluences. The thing is that this monthly average demand could fail. Of course it could fail. Price could drop down there and eliminate it. But do you agree, based on all the experience that you have with supply and demand, on all the analysis being updated every day and week for years? I've been doing this since 2013, since the community was first launched. After seeing all these examples of before and after fact, calling trades way before they happen, the magic candles that we draw usually, the arrows saying this is going to happen. I mean, does this look like one of those levels that price is going to drop and rally strongly? Based on all that we are discussing, yes. Tavi saying yes, or Tavi saying no. That's what I'm seeing according to the rules. So too many bigger time frame areas of demand. So you're gonna take a short on a 4-hour area supply there, on a 1-hour area supply here. Come on, no. Wait for new super strong areas of demand on the 4-hour, even 1 hour if you're trading the intraday and the daily, and then go long with this super big picture long bias. Okay. Damien, I'm new here, but I agree. Okay, Davies, is it going to long on potential daily demand aggressive here? Not really, because this is very common. Okay, it's very common to have 50% retracement, fake out, and if we get this bullish engulfing pattern confirmed at the end of the week, great. In order to trade this area of demand here that is being created, we want to wait for the bullish engulfing pattern to be confirmed at the end of the week. 2 days are left, and if we get a higher than that high, even better, because that would mean also that we got that, and potentially there is a weekly area of demand being created there with the nested area of demand already in the making. Make sense, Davis? So you have to project what might happen if these highs engulfing are eliminated and all that. Okay? So this is the pound dollar. Let's take a look at the dollar yen because this is interesting. Okay, I'm going to move it up. I added some comments over there. So if you look at the monthly, okay, what do you see on the monthly? That is, yes, a mess. It's a mess. The monthly is a little bit of a mess. Okay, there's an area of demand over there. Okay, great. But let me show you. Already saw the big picture, so you know what I'm going to say. So look at what it's been doing for months and months and months. So we've got here 1, 2, 3, 4, 5, 6 fake out. Okay, 6 engulfing patterns or more, trying to reach that area of demand. But all these, why are we having all these bearish engulfing patterns? Why all these 10, 12 engulfing patterns? Why? Can you tell me? Why do we have that? Tavi said the right thing. VHTF, very high time frame. Why are we seeing that? Well, now, Damien, you're new, and many people, many of the traders in the chat room and in the community are not using the big time frames, but what do you think why this is happening? Look at that. Super strong rally, 3 years east. This is what we also consider overextension, bearish engulfing pattern. Look at this pink candle, that pink candle. That's where we have the monthly every month, or was it here? I'm not sure. Okay, so price tried to reach that 12 months area of demand. So there is a lot of room for price to keep on dropping all the way down. So dollar yen short bias. That doesn't mean that the dollar yen is going to drop all the way down like that in 12 months. Okay, but it's definitely looking like that's going to happen in the next probably 2 years, 3 years. Okay, make sense? So by just looking at a 12-month chart, it's telling us what would you be thinking on the dollar yen here? Going long or short in the monthly and weekly sequences? What do you think would be higher odds? Longs and shorts. Now, by definition, if price does go down to 9%, means not much buy order until then. Yeah, on 12 months, short. So if you know that the 12 months has short bias, if you know that this was supply and overshot, fake out, and eliminated that area of demand, and now we've got a 6 month area of supply. If we have 6 months area of supply, then 12 months thinking of doing that. You have 3 months with 2, 3, 4, 5, 4, 6 bearish engulfing patterns. You have pink candle on the monthly, as many engulfing patterns, very strong area supply. Then some of you will say in the community, I mean, no, I don't know if any of you will do, but some member will say, can I go long in confirmation here? Well, if you knew all this, what would you say to that member? Going long in confirmation? No way. Exactly. No way. Can those longs play out? Of course. But isn't it better to work on your patience, okay? And wait for the strong areas of supply, like that one. Like that one. Okay? Like that one. Wait patiently, because that's going to help you a lot in your trading. Because the odds of success of these levels are way higher than smaller time frames like the 1 hour and the 4 hour. Way higher. Because you have the 12 months bearish bias, 6 months bearish bias, everything's got a bearish bias. So short is the way to go. Now we've got a weekly area demand. Price could start rallying again to the interchange zone here, or even higher to the daily nested within the weekly. So short is the way to go. So going long and short, obviously it's possible, but in my humble opinion, after all these years trading and educating and all that, my conclusion is that you should not have both sides of the equation in your trading plan. I mean, you should stick to one direction. Either you go long or you go short, but thinking of, I'm going to go long and short if this happens. That's not a good approach, in my humble opinion. After all these years of experience trading, supply and demand, or trading, it doesn't matter if it is supply and demand or not. If you wait patiently for the best looking setups, obviously you're going to be right more often than not. That's for sure. That's a fact. But if you start playing around with counter-trend trades without looking at the bigger picture direction, trading consolidation, not using these high time frame confluences, trading in the middle of the range, then you know what's going to happen. You know what's going to happen. So I would highly recommend that you stick to one direction unless you are at extreme. If you are like extreme over there or down there, then you can start thinking of going long. But in the meantime, you want, look at that, bearish engulfing patterns, engulfing patterns, engulfing patterns. So everything is pointing down. So, and supply is right there on the 3 months. Any questions about this one? Any other asset you would like to look at before I continue a little bit more? We have like 10 more minutes. We have got a list here. These Kiwi yen, Singapore yen are very similar to the yen. They are the dollar yen. They are doing more or less the same. Okay, David said Eurocard and Gopi Vodafone. So let's take a look at the Eurocard and then Vodafone, and I think that those are the two. Look at all the ones that I wanted to look at. Well, somebody asked in the committee about Disney. Okay, so I'm going to take a look at Disney before, and then Eurocard, and the last one. Okay, the last one, Vodafone, and that's it. Otherwise, we could spend here hours and I could spend here hours and hours and hours. Okay, sorry, Vodafone. Okay, so let me read TV for 1 month chart. We have that pink candle hitting an other area from 2019. You mean this one over here? Yeah, exactly. Pink candle as well. So that's look at this. All these pink candles trying to reach them at the area of demand. So going short right here, no, but then you wait for the retracement and then go short here. When price is here, right there, within this pink candle and the weekly area of demand, going short right now is not a good idea. So we need, that is the impulse, the original impulse got till there. So that is the interchange zone right now. So it could rally over there and then from there drop. So now let's take a look at Disney quickly. Look at Disney. What can you tell me? What do you think I'm going to say? Anyone can tell me? Gopi said shorts. Broken record, Avis. So look at that. No consolidation away after a strong impulse. Demand down there. Trend line broken. Demand eliminated in the monthly. Supply created. This is a 3 months, 6 months area demand, but look at that. 6 month candles on the base, which is good, but only 1 year C. 3 months area demand, too much trading in the area. So the 3 months bearish engulfing pattern, no consolidation away, under attack. A strong area supply for counter trend shorts. Make sense? Also on the monthly. That's the analysis. No need of anything. No indicator, no news on Disney. You don't care. Disney is just too expensive right now. So now they are closing their shorts, the long, sorry, and backing in profits. Longs, lower, higher probability will be possible down there or after a bigger retracement, higher time for confluences, and then we get maybe 3 months bullish engulfing patterns, weekly, monthly wow longs. That's the kind of longs we want to see, but we need the correction. We need first the reversion to the mean, the correction, the retracement, and then we start looking for confluences. Make sense? Okay. So next one, EuroCAD. So on the EuroCAD, we've got this super wide area of supply on the 12 months. Okay. We have the bearish engulfing pattern on the monthly, but then we have also here 1 and 2 bullish engulfing pattern. Every time price hits that super wide area of supply, it makes a higher high. So price rallying, new area of supply demand here after trend line break, gain control, engulfing pattern, engulfing pattern, engulfing pattern in the making. So these 6 months candle again the speed or the velocity. Okay, it took only two months versus 6 months, and it has created a super strong area of demand with a mess here, eliminating 2 areas of demand. So longs is the way to go right now based on all these confluences and the fact that we have also the 12 months confluences and the area of demand supply on the 12 months under attack. We've got a bearish engulfing pattern, but that is far from being reached, the origin of the move, which is okay right there. There's a lot of room for price to reach the top area, which is a monthly area supply already tested. Make sense? Eric? He's asking, do all time frames in the sequence need to consolidate away? I think I answered that many times in the committee and to you, I think today or yesterday, I don't know, somebody asked. Ideally, you want that, the consolidation away, but if the consolidation away does not happen, you want 2 things. The first thing is an engulfing pattern as confluences. And the second thing is that it doesn't happen after a very strong rally or drop in price. Makes sense? You want engulf, if there is no consolidation wave, you want engulfing patterns. And the engulfing patterns, you want them being created not after a very strong rally or a very strong sell-off. You want them to be created in the context of something, located within somewhere, well located. That's what you want. Okay? Okay. He's saying, all right, makes sense. Thanks. Okay, no consolidation away, but it's a confluence. It's got the right location over there. Okay, but if you, this is a very engulfing pattern, but now let's take a look. 1, 2, 3 bullish engulfing pattern versus 1 and higher every time. So which one do you think it wins? That wins. Copy. We've got 3 versus 1. So this is confluence, but not the right. Not it is not happening at the right moment. Make sense? So this is supply. When it gets there, shorts. But then what? That area of supply on the monthly is already tested and it is nested there. So even if we wanted to go short, we would need confirmation. So now we've got the strongest rally in months, long bias. Make sense? That's EuroCAD. And the last one of today's webinar, Vodafone. Oh my God, this is a little bit of a mess. But, okay, 12 months. Over there. That's where price has been trying to reach for years, okay? So on the 6 months, we've got another one over there, nested. But here we have the trend line break that created an area of supply that was overshot, very common. And then another area of supply has been created there. Price dropping, this was demand because it eliminated that area of supply, overshot it. So we should have an area of supply right there. Okay, so 6 months in the downtrend, 12 months bearish bias, 3 months in the downtrend, super strong area of supply created. Now we've got 1, 2, 3, 4, 5 ERC candles. So what are we expecting? Exactly. We are expecting a bigger retracement. As simple as that. So we've got now the bullish engulfing pattern on the 3 months as confluence. Look what this little friend over there. Bullish engulfing pattern on the 6 months. So we have 1 confluence, 2 confluence, monthly while long, and a weekly area demand. So this is the kind of counter trend setup as well. This is happening, remember what I just said to Eric, he asked about the confluence. This is happening at the right moment. After a very strong sell-off, we get bigger time frame confluence, engulfing. That's one of the good scenarios. The right structure, the right price action at the right moment. Make sense? Yep, correct. So this is what we are expecting right now. Shorts right there are gonna be great. Okay, so right now, if you are a counter trend trader, you could say, okay, I'm gonna go long on Vodafone. Okay, good, but I have my alerts set up there because there are hundreds of stocks. So, and unluckily, unfortunately, I'm gonna say something which is hard, but time flies, and our lives are like we will pass away so soon. I mean, time flies. So 3 months, 9 months will go by so quickly, unfortunately. It's a pity because we only have one life, for sure, one life. So alerts set there on many time frames or many stocks like this. I'm patiently waiting. Sometimes it will reach that area super fast, sometimes it will be slower, but since I'm tracking hundreds of assets, almost every day or every week I get a few alerts. So that's all we need. So if you want to trade intraday on stocks, you can do it as well, but I prefer to lean on the big time frames. Okay? Because there are hundreds of stocks. On Forex, I would understand trading intraday and all that. Why? Because Forex is a little bit more, well, it's not trending up or trending down. It's not a trending market. Usually it's consolidating because there's a continuous fight between currencies and countries and companies exchanging money to do all their businesses and all that. So it's finding a trend in Forex is a little bit difficult sometimes. You have to be very, very patient. So this is more or less what I wanted to cover in this webinar. Again, we covered the speed of arrival, the velocity, the consolidation away, the engulfing patterns, a strong rally, expecting bigger retracement. And remember, those retracements are going to happen no matter what. The thing is that when those retracements happen, sometimes it will be too late and they will say, well, I've been waiting for 3 weeks, 4 weeks, and now price reaches the level and it isn't valid. Well, okay, if you want to take it, take it. Okay, but sometimes price does like that. It doesn't move. I mean, the markets do not move the way we want. It moves the way it wants. That's it. You just have to adapt yourself. You have to have certain rules, follow the rules, and when the rules tell you, hey, you can blindly take the trade, do it. But if the rules are starting to get a little bit messy, the scenario, you are starting to doubt, then you've got a problem. So let me ask, you should stay away. So let me ask you, would you ever doubt of taking a short there? Gopi is saying no. No, another one, no. I would never doubt taking a trade there. Super strong area of supply. So I wouldn't doubt. Okay. Another thing is this, price almost reaches that area, okay? Starts dropping. And when it starts dropping, it creates a bearish candle. And then right afterwards, a ping like that, and a bullish engulfing pattern like that. Would you doubt about the trade? Exactly, Renu. Yes. Now I would doubt. Gopi says no. I would, because that's a correction, that's an attack. One thing is this, one thing is having price rallying into the level with basing candles or ERC candles, and then it finds or it bumps into the obstacle. And another one is rallying ERC candle and then a valley. That's an attack. I'm not going to take short certificate with an attack and an engulfing pattern on the 3 months. No way. I'm going to wait for confirmation. Okay, that would be 2 valleys, an attack. No way. You have to watch many charts to see what I'm trying to explain here. But this is very common. So that's why many times I will say the level, sorry, the level is under attack because of that. Sorry, I'm coughing. So I think that's everything. Okay, it's a little bit too late now, so I will be uploading the webinar in the morning so that you can watch it again, and many of the others in the community can watch it because many of them are sleeping. So thanks a lot for joining us today, and hopefully these webinars, the Q&A sessions, will help you understand the power of these imbalances and the bigger time frame imbalances and confluences. They are super powerful. Enjoy the rest of the day and be happy.